welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 19th of April 2020, and yesterday we published our gold and silver weekly update for the week ending the 17th of April. Now, in yesterday's video, we highlighted that gold fell last week, albeit a modest fall of $3. Now, to many this appears confusing, especially as the economic data being announced, both past, present and future, whether it be manufacturing, retail sales, domestic growth or unemployment. All of these figures are not only disappointing, but somewhat devastating. When you then add fuel to the fire, so to speak, like central banks reducing interest rates and agreeing to buy up both government and corporate bonds, and governments borrowing to the hilt to spend and invest into their failing economies in the hope to mitigate most of its dire effects, it's no wonder that one expects gold and silver prices to skyrocket to the moon. And they simply aren't. Now, we've made it pretty clear why this won't happen with silver just yet, as the industrial demand has all but fallen through the floor. And so any monetary demand for the metal, which would normally push prices up and considerably, are finding it difficult to compete with the downward pressure placed on prices as a result of the lack of industrial demand. And as we have said so often, this will change once production starts rolling again. So, despite all of these catalysts, precious metal prices are still modestly priced, if not subdued, even when obtaining the physical, due to transportation issues, primarily means that a ready supply is not fully available to those who want it imminently. Now, the one factor which could indeed cause precious metal prices to leap forward is any major devaluation in the price or value of the US dollar. And frankly, looking ahead a year or two, this is very unlikely to happen. You would also, as an alternative, require equity markets to fall through the floor and past previous lows. And that would then, of course, be enough fuel to get that blaze really going. But what is the likelihood of the dollar falling? Well, we think it's going to be a while yet. Why? Because frankly, when comparing it to most of the other major currencies, there's very little chance of it falling pro rata. You see, not only does the Fed and US governments have to stimulate their economies, but so much virtually every industrial nation of the world. And the major competitor to the dollar, the euro and the euro area, has problems of its own. Let's listen to a brief article published by Reuters today to give you an idea of the difficulty that even the euro area are in at present. Reuters article dated April 19th. Headline: Europe needs at least 500 billion euros from EU institutions for recovery. Europe will need at least another 500 billion euros from European Union institutions to finance its economic recovery, on top of the agreed $500 billion package, the head of the Eurozone Bailout Fund said. In an interview with Italy's Corriere della Sera paper, published on Sunday, European Stability Mechanism Managing Director Klaus Regling said the easiest way to organise such funds would be via the European Commission and the EU budget. Quote, I would say that for the second phase we need at least another 500 billion euros from the European institutions, but it could be more, unquote, Regling told the paper. For that, we need to discuss new instruments with an open mind, but also use the existing institutions because it is easier, including, in particular, the Commission and the EU budget. Rethinking European funds can go a long way in keeping the European Union together, Regling said. European finance ministers agreed on April the 9th on safety nets for sovereigns, companies and individuals worth in total 540 billion euros. They also agreed that the Eurozone, which the IMF predicts will plunge into a 7.5% recession this year, will need money to recover, but they had different ideas on how much is needed and how to raise it. EU leaders are to discuss that at a video conference on April 23rd. The idea around which a compromise may emerge is likely to involve the European Commission borrowing on the market against the security of the long-term EU budget and leveraging the money to achieve a bigger effect. End of article. So, what is clear from here, together with the US Congress now dealing with its fourth bailout package, is that for the moment, more and more financial support is going to be spent to prevent each country's respective economies from completely collapsing. Now, this is where the United States has inherent strength. It is still the world's reserve currency, that is the dollar, and therefore it is better positioned than its counterparts. Now, eventually, the chickens will come home to roost, and all of this has to be either paid for or an economic or currency reset has to occur. But this is not either weeks or months away, but years. We've stated that the 2020 decade will be the decade for precious metal prices, and we sincerely believe that. And we shall most likely see gold gradually rise well past previous peaks during these years. But meanwhile, however, we may still have to deal with a competitive rising equity market, which, frankly, will be again sucking monies, liquidity out of the system, which would then normally have gone into gold. Because the equity markets will be the beneficiaries of all of this stimulus. And if, and it is a big if, governments can extract some global growth out of their endeavours, then the can will have been successfully kicked down the road that little further. So meanwhile, by all means, look at any falls in the price of gold and silver as an opportunity to buy. But again, not at exorbitant premiums, which would mean you'd have to wait another year or two in order just to break even. And in our view, there is still plenty of mileage in this market, without any investor or potential investor having to panic buy. The dollar index is hovering around the 100 mark and is desperately attempting to surpass it and hold above it. There are $1.25 to the pound when only a month ago there were 1.33. And there are $1.09 to the euro when in a similar time period there were 1.14. Dollar is still getting stronger, and this acts as a tremendous headwind for gold and silver prices, even though they have all risen of late. So, do you agree with our assessment or disagree? Either way, please do share your thoughts. Thank you for listening, and if you haven't already done so, please subscribe to this channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting likewise to also subscribe, if you haven't already done so, to our Richard and Greg channel, where every few days we provide an update as to what is going on in the global situation. And finally, although we have neglected it of late, our Trump for President 2020 channel will also start to become more updated as the next few days progresses. So again, if you haven't subscribe to that one, please, we provide a link in the description box below. And a last piece of information for all of our UK Silver Inner Sanctum subscribers who are eligible for our 1 ounce silver round. These are now being posted this week, recorded delivery. They're likely to go out on Wednesday. We had some difficulty actually obtaining a recorded delivery appropriate stickers without having to stand in a post office queue for over an hour. However, this has been rectified and these will go out Wednesday, so they should start popping through your door at the end of the week. And those who've expressed an interest in acquiring the silver round outside of our silver membership, who get one for free if you've been with us for 12 months or more, we shall be highlighting how you can get your hands on what is left of the supply but we have to advise you it is very small, and we have already received some requests from existing bronze and non-inner sanctum members. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.